Social Security changes connected to May 2026 may look straightforward, but for people relying on SSI, SSDI, or monthly Social Security checks, the details can affect more than the headline suggests. Payments have changed, work limits have moved, Medicare deductions can shrink the raise people actually keep, and a new senior tax deduction may affect federal taxes for older Americans. When a household is already dealing with higher costs, fixed income, medical bills, rent, food, and utilities, even a small rule change can matter. The first major update is the 2026 Cost of Living Adjustment, known as COLA. The Social Security Administration confirmed a 2.8% COLA increase for 2026. That is higher than the 2.5% increase beneficiaries received in 2025. And it is also slightly above the long-term average of 2.6%. On the surface, that is good news because benefits are going up. But the key detail is this: the increase announced by Social Security is not always the same as the amount a person actually receives after deductions. For SSDI recipients who are also enrolled in Medicare, the Medicare Part B monthly premium rose to $22.90. And that premium is taken directly out of Social Security or SSDI payments. That means many people should not plan only around the gross raise. The average SSDI benefit increased from $1,586 per month to $1,630 per month, a $44 monthly increase before Medicare is deducted. After the Medicare Part B deduction is considered, the average disabled worker saw only about $26.10 more per month. What stands out is that the raise is real, but the amount left in the check can be much smaller than the headline number. For someone trying to cover medication, groceries, transportation, housing, or other daily costs, the net payment matters more than the announced percentage. SSI recipients also saw higher federal payment limits. The maximum federal SSI payment for an individual rose from $967 per month to $994 per month. For eligible couples, the maximum federal SSI payment increased from $1,450 per month to $1,491 per month. Those SSI increases started showing up on December 31, 2025. That timing matters because SSI payment scheduling can make the higher amount appear before the new year is fully underway. If someone on SSI did not see the increase in their payment, the source material says they should contact the Social Security Administration immediately, because something may be wrong with the case. Some people may have case-specific factors that affect the exact number, but a missing increase should not be ignored. The bottom line on COLA is clear. The 2.8% increase is in effect. SSI federal maximums have moved higher, and SSDI averages have increased. But Medicare can quietly reduce the real benefit increase for many disabled workers. Beneficiaries should plan around the amount that actually arrives after deductions, not just the percentage reported in the announcement. The second major update is especially important for SSDI recipients who are working, thinking about working, or testing whether they can return to work. The Substantial Gainful Activity Limit, often called SGA, changed for 2026. This is the monthly earnings threshold the Social Security Administration uses to decide whether a disabled person may be earning enough from work to be considered capable of supporting themselves through employment. If earnings go above the relevant limit consistently, SSDI benefits could be discontinued. For non-blind SSDI recipients, the 2026 Substantial Gainful Activity Limit is $1,690 per month. That is $70 higher than the 2025 limit of $1,620. For SSDI recipients who qualify because of statutory blindness, the 2026 limit is $2,830 per month, which is $130 higher than the 2025 amount. These numbers are important for anyone considering part-time hours, extra shifts, side income, or a gradual return to work. A higher limit gives a little more room, but it does not remove the need to track earnings carefully. Now notice this. The SGA limit is not the only work rule SSDI recipients need to understand. The trial work period is another major protection. the Social Security Administration allows SSDI recipients to test their ability to return to work without immediately losing disability benefits. In 2026, the trial work period earnings threshold is $1,210 per month, up from $1,116 in 2025. A beneficiary can earn above that trial work threshold for up to 9 months within a 60-month window and still receive the full SSDI check during those trial work months. Once all 9 trial work months are used, earnings are then measured against the standard substantial gainful activity limit, which is $1,690 per month for non-blind SSDI recipients in 2026. This rule can be helpful, but only if beneficiaries understand it before they begin working. A person may think they are simply testing a part-time job, but if earnings exceed the trial work threshold, those months may count toward the 9-month limit. Anyone on SSDI who is considering even a limited return to work should understand the $1,210 trial work period threshold, the $1,690 non-blind SGA limit, and the $2,830 blind SGA limit before accepting shifts or increasing hours. The trial work period gives people a chance to see whether work is sustainable, but it is not unlimited, and the 60-month window matters. Another work-related number also changed in 2026. The amount of earnings needed to earn one Social Security work credit increased to $1,890, up from $1,810 in 2025. Workers can earn a maximum of 4 credits per year. This is important for people building a work history toward future Social Security retirement benefits or possible SSDI eligibility. The amount usually rises over time because it follows the National Average Wage Index, but the new number still matters. The third major update is not a monthly benefit increase, but it could affect seniors who still file federal taxes. The source material says that under a new law called the One Big Beautiful Bill Act, passed in 2025, a new $6,000 senior tax deduction became available starting in the 2026 tax year. If a person is age 65 or older, they may be eligible to deduct up to $6,000 from taxable income. If a married couple files jointly and both spouses qualify, the deduction can double to $12,000. This deduction is described as a bonus deduction, meaning it is on top of the existing additional standard deduction that seniors already receive. To qualify, the person must be at least 65 years old, and modified adjusted gross income must be under $175,000 for an individual filer or under $250,000 for joint filers. The deduction is available whether the taxpayer itemizes deductions or takes the standard deduction, which makes it accessible to many seniors who do not itemize. But this is where accuracy matters. This deduction does not mean Social Security benefits are now tax-free for everyone. Some headlines may make it sound that way, but the source material is clear. It is not a blanket exemption. The deduction reduces overall taxable income by up to $6,000 for an eligible individual or up to $12,000 for qualifying married couples filing jointly when both spouses qualify. That reduction may push some seniors below the level where Social Security benefits are taxed, but it does not automatically eliminate taxes on Social Security income. The IRS has confirmed that Social Security retirement benefits, disability benefits, and survivor benefits can still be taxable depending on total combined income. SSI is different. Supplemental security income is never taxed, and that has not changed. This distinction is crucial because SSI, SSDI, retirement benefits, and survivor benefits are often discussed together, but they do not all follow the same tax rules. The senior deduction may reduce taxable income and may lower taxes for some eligible seniors, but it should not be treated as proof that every Social Security recipient owes no federal tax on benefits. The deduction is also temporary. According to the source material, it runs from tax years 2025 through 2028 and then expires. That creates a 4-year window for eligible seniors to potentially reduce their tax burden. Because the income limits, filing status, age requirement, and interaction with taxable Social Security benefits can be complicated, the source material recommends speaking with a qualified tax professional or elder law attorney if there is any uncertainty. A small mistake could mean missing a deduction, misunderstanding taxable income, or leaving money on the table. Taken together, these updates show why beneficiaries should focus on the numbers that apply to their own situation. The 2026 COLA is 2.8%, higher than 2.5% in 2025, and slightly above the long-term average of 2.6%. The maximum federal SSI payment is now $994 for an individual and $1,491 for eligible couples, up from $967 and $1,450. The average SSDI benefit rose from $1,586 to $1,630, but the Medicare Part B monthly premium of $22.90 means the average disabled worker may see only about $26.10 more per month after that deduction. For SSDI recipients who work, the 2026 non-blind SGA limit is $1,690 per month. The statutory blindness SGA limit is $2,830 per month, and the trial work period threshold is $1,210 per month. The trial work period can allow earnings above that threshold for up to 9 months within a 60-month window while the full SSDI check continues. The amount needed for one Social Security work credit is now $1,890, up from $1,810 in 2025, with a maximum of 4 credits per year. For seniors age 65 and older, the new deduction may reduce taxable income by up to $6,000, or up to $12,000 for qualifying married couples filing jointly when both spouses qualify, as long as modified adjusted gross income is under $175,000 for individual filers, or under $250,000 for joint filers. It is available whether itemizing or taking the standard deduction. It is in addition to the existing additional standard deduction for seniors, and it is temporary for tax years 2025 through 2028. Still, Social Security retirement, disability, and survivor benefits can remain taxable depending on combined income, while SSI remains never taxed. The practical message is simple: do not assume every update affects every beneficiary the same way. A person on SSI should verify the new payment amount. Someone on SSDI should calculate the benefit after Medicare deductions. A disabled worker considering employment should know the trial work and SGA thresholds before increasing earnings. A senior filing taxes should confirm whether the new deduction applies and how it affects taxable income.